If you have $5,000 in your bank account, do this now. Can you consider yourself among the lucky few who have $5,000 sitting comfortably in the bank? If that's the case, you need to get serious about your finances and start making some smart moves. If you have a substantial quantity of money and you know how to put it to good use, you may get where you want to be financially much faster. Having at least $5,000 in savings is a wise decision. Everyone should have a savings account dedicated to unexpected events. You should have 3 to 6 months worth of living expenses stashed away in case of an emergency. That way, if the worst were to happen, like you losing your job or experiencing a major appliance breakdown at home, you wouldn't be buried under a mountain of debt trying to make ends meet. Many people have obviously not been saving nearly enough. According to a survey conducted by the Federal Reserve Board in the previous year, 1/3 of Americans do not have even $400 in emergency savings. If you're one of those people, you should do everything in your power to speed up the rate at which you save money. If, on the other hand, you have a sizable savings fund, you may be at a loss for what to do next. Don't worry, we got you covered on that too. Here is a list of 6 things that you need to start doing right now. 6. Save for the long term. Let's say you live modestly by sharing an inexpensive apartment with 2 roommates, taking advantage of the fact that you're in a walkable city, and using coupons for all of your food shopping. If that's the case, a savings buffer of $5,000 should be plenty, as you may only need to cover $1,500 in monthly costs. The next step is to start saving for the future by contributing to a retirement account or a company-sponsored 401k plan. Even if retirement is decades away, you should start saving now so that you have enough money to enjoy your golden years. 5. Start investing. In light of current interest rates, it's likely that the interest earned on your savings account balance will be low. However, your money has the potential to expand substantially if you create a brokerage account and invest part of it. If you have an emergency fund and are on schedule for retirement, you may open a brokerage account and invest in stocks or mutual funds that might provide high returns. There is always a level of risk when investing, so make sure you have a solid cushion in place first. A brokerage account or retirement plan, which is also invested, may help you build money far more quickly than a simple savings account. Congratulations are in order if you've managed to put away $5,000 in savings. Do not, however, relax thinking that your job is over. It's possible you'll need more than that to meet your emergency expenses, and even if you do, you should maintain investing and saving for your retirement. The bright side is that you can use the same methods to save another $5,000 and a lot more after that. 4. Establish a stable financial foundation. Keep some money in the bank as a safety net. Maintain savings of at least $5,000 or the equivalent of 1 month's rent. That way, you may pay for necessities like new brakes or dental surgery without skipping payments on other expenses or running up credit card debt. Put the money in a place where you can quickly access it. Reduce your balances on credit cards with high interest rates. Do your credit cards have any outstanding balances? You may use the answer to that question while deciding how to spend $5,000. It may be beneficial to make a sizable payment on your credit card balance all at once, since interest is charged on the balance daily. 3. Create an emergency fund. The purpose of an emergency fund is to provide financial support in the event of a financial emergency. To be safe, you should put some of your newfound wealth into an emergency fund, even if you already have some money set aside. A $1,000 emergency fund is a good start, but experts recommend saving up to 3 to 6 months' worth of living costs, such as rent, utilities, food, and healthcare, in case anything unforeseen happens, such as losing your job or needing medical care. Keeping your emergency savings with your normal bank might be the most practical option, but in most cases, keeping it separate is the best course of action. That way, you won't have to worry about using your money for non-emergency purposes. These choices may be useful for short-term and emergency fund savings, since you may wish to consider cash equivalents for targets less than 3 years away. Savings accounts at banks and credit unions typically provide a minimal return on your money, presently at 0.21% APY or 0.21% of your amount in interest each year. As of October 2022, a high-yield savings account may provide interest rates in excess of 2% APY, allowing you to earn more money from your savings. The Federal Deposit Insurance Corporation also insures deposits up to certain limits in high-yield savings accounts, so you may put your money in there without worrying about losing it, but you may only be able to make a specific amount of withdrawals each month. 2. Time your short-term objectives to earn more. If you've already got an emergency fund established, you may want to put some of your spare funds toward objectives that can be achieved within a relatively short period of time. Certificates of deposit are a safe way to invest money since they are backed by the Federal Deposit Insurance Corporation in the event of a loss. Potentially, they provide a greater return than comparable FDIC-insured alternatives. However, early withdrawal is subject to fines. Experts warn, remember that CDs are not totally liquid. The interest they provide is somewhat greater, but only if you don't need the money often. While certificates of deposit aren't the best option for saving your whole emergency fund, they do serve you well if you have some idea about when you'll need the money. 1. Treat yourself. This wasn't something you thought we'd forget, was it? After you've established a solid financial base for yourself, stocked up on an emergency fund, and thought about your near and far-term goals, you might want to consider treating yourself with some of your extra cash. Motivating yourself to continue making sound financial choices over time can be aided by rewarding yourself for short-term successes with smaller rewards like a night out on the town or a weekend getaway. In conclusion, if you have $5,000 in your checking account, the most beneficial thing for you to do with that money is to invest it in a strategic manner. Putting some of your money to work for you is a simple process that can be accomplished with the assistance of a financial advisor or through the use of online investment platforms. If you use compound interest, it will not only assist you in growing your money over time, but will also safeguard it from the effects of inflation. Along with this, one of the most important things you can do to lower risk and limit possible losses is to diversify your investment portfolio. Thanks for watching this video. I really hope you enjoyed it. Additionally, if you're new to this channel, I strongly encourage you to subscribe and click the like button. You can also keep up with all of my most recent videos. See you in the next one.